Hello, everyone. Thank you so much for joining us again for another weekly wrap-up. My name is Jeremy Cronemeyer. I'm Operations Manager for Wickham Financial Group, and I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Yeah, thank you, Jeremy. Thanks for our listeners jumping on the call. Listen, we rose for the second straight week from the huge drops that we had. The S&P, Nasdaq, and the Russell 2000 were all up about 3%. That was led by technology up about 4% due to some pretty strong earnings that came out from the technology companies, but really Microsoft. Energy sector was the big underperformer. That was down about 7%. We saw crude hit about 58.5 per barrel. Now, gold futures, they pulled back a bit from their record high, but Bitcoin approached $100,000 per coin. Economic data, we saw Q1 GDP contract by about 0.3%. That was the first decline that we've seen in about 3 years. But on the flip side of that, we saw consumer spending increasing 3% at an annualized rate in Q1, first quarter one. Now, core PCE rose by about 3.5%. We did see the non-farm payrolls increase about 177,000. The unemployment rate, that stayed about 4.2%, so that's been super steady and low. So keep that in mind. U.S. consumer confidence, that did drop to a 5-year low due to those continued tariff concerns. And the 1-year inflation rate expectations rose to about 6%. So we did see President Trump sign an executive order releasing some auto tariffs. General Motors and Ford did come out and warn about some significant financial impacts from those tariffs. Now, globally, we saw the Bank of Japan keep interest rates pretty steady at about 0.5% and halved their 2025 growth estimates. China's manufacturing activity fell to more than expected. Their PMI remained in expansionary territory. The Eurozone's Q1 economic growth was about 0.4%, with Germany expanding by just about 0.2%. Eurozone inflation remained pretty much unchanged at about 2.2%. That was kind of basically what happened that last week. Now, this week, it's going to be a lot about the Fed wrapping up some earnings. We'll get some U.S. economic data. So we'll have the Fed coming out announcing their expectation. We'll have a lot of Fed speak. We're going to have 10 of the FOMC members. They're scheduled to have some public appearance. So we'll have some Fed speak out there, some rhetoric that we can kind of trade off of or be mindful of how the market might react. U.S. data will be coming out, releasing some 10 and 30-year Treasury options, ISM numbers, some PMI numbers, consumer credit, and Q1 non-farm payroll productivity and unit labor costs will be coming out. Earnings, really wrapping it up. We're really towards the end here. So we'll have advanced micro devices, AMD, Palantir, Disney, Wind Resources, ARM Holdings, and Uber, just to name a few. That'll be really kind of carrying up the tail here in earnings season. And then Bank of England, they're expected to cut rates by about 25 basis points on Thursday. Looking at some headline PCI, maybe that was cooling for them. And then China, they'll have a tentative schedule to release their April trade balance figures. Jeremy?
Thanks, Graham. So I had a question for you. I know that, like I said, you said the Federal Reserve meeting is tomorrow. How do you see that meeting going, and how do you see it maybe what the markets are going to do based on what they do?
Yeah, no, I'm glad you asked the question. I think they're going to stand pat. There's still too many questions about the effects of the tariffs. Will they be pulled back? Will they have some limitations? Are there conversations and discussions that the administration is saying that they're having, but we just don't know if there's any agreements out there? And also keep in mind that, we had the S&P fall to about a 20% pullback, but in 3 weeks, it made it all back. So basically, we're right back to where we were pre-tariff announcement, Liberation Day, right? So the market is quite volatile. I probably don't need to tell any of our listeners about that, but just keep in mind, and I would encourage that. I don't know if we have the all clear yet because we don't have any resolution to the tariffs. So still expect some volatility. And I think Fed's going to take that lead and just say they're going to stand pat until they get more clarity.
Gotcha. Well, Graham, we always appreciate the information and expertise. And thank you to our listeners for joining us every week. And we look forward to seeing you guys next week.
Take care.